Welcome to my channel, guys. So today I will be revealing my secret to how to scalp the markets. So the main assumption here is before I get into the main concept, the minimum assumption is everybody of you who is watching this video knows the minimum concepts like ICT concepts, ICT language, like his breaker blocks, fair value gaps, first presentation, fair value gaps, and whatever it may be. So the assumption is you know minimum ICT language and ICT PD arrays. So this is the daily market pre-routine. You have to focus daily. You have to do this before the market opens. So you have to be plotting all your key fair value gaps past 5 days, guys. At least past 3 to 5 days fair value gaps you have to plot on a 1 minute chart. This is market open from 9:30 a.m. to 10 a.m. Post lunch 1:30 p.m. to 2 p.m. Evening session 7 p.m. to 7:30 p.m. Midnight reset, that is 12 a.m. to 12:30 a.m. So you have to plot all this first presented fair value gaps on a 1 minute chart for the past 5 days. And the next thing is you have to plot all your new week opening gaps, new day opening gaps on both RTH, that is regular trading hours, and exchange traded hours. If the gaps are large enough, then you may plot even the quadrant levels, different quadrant levels. And similarly, you have to plot your higher time frame, daily chart, premium and discount wicks. At the same time, daily chart, fair value gaps. It could be daily chart, weekly chart, or it could be a 4 hour chart, it could be a 1 hour chart. So wherever you find all these premium and discount wicks which are relevant to the current price action, and similarly the fair value gaps which are relevant in today's price action, which are in proximity to the today's price action, you can mark them. And similarly mark the liquidity, where are the nearest daily highs and lows, and where are the nearest session liquidity highs and lows, like London session, New York session, Asian session. So you need to do this pre-routine market activity every day before the market opens. So you need to have all these things on your chart before market open. So once all these things are plotted on your chart, so I just wanted to go about scalping. I just wanted to show you a trade which I took on 8th October. This was the first trade I took. So how I scalp. So I just want to show this trade before I go into the chart and I explain how I took the trade, what is the logic behind this trade, how I do the scalping and all. So first thing is you need to be ready with your pre-market session, pre-market routine. So you have to do all these things before the market opens. So once everything is done, then you can go into the chart. So I just want to show this trade before going into the chart, how the trade was executed. So I'll just play this trade. You can see here the price came very close to my stop loss, but it was almost 1 tick or 2 ticks off of my stop loss. So that's it, guys. So this is the trade I'm going to explain. So to begin with, just let me establish the context here. So this is the daily chart, this is the 5 minute chart, this is the 1 minute chart, and this is the 15-second chart. Okay, so I'm going in trading view replay mode. I'm going on Wednesday 8th October. The trade was taken at this time. So I'm just going to replay this. So guys, like I said, we have to plot all these levels, right? We have to plot daily or weekly or whatever it may be in the nearest proximity. You have to plot premium and discount wicks, right? Okay, so let me plot. So this is the daily chart and this is 8th October day's price action. So which is, so this candle is in proximity to 8th October. So let me plot all the 4 quadrant levels on this daily premium wick. This is premium and this is discount wick. Okay, so the bottom side wicks are discount wicks, the top of the candle wicks are premium wicks. So now I have plotted all the 4 quadrants on this premium wick. So now time is around 10:05 a.m. So you can observe these levels, guys. So this is the low of the quadrant. This blue is the 25% level. This is 50% level. And this is 75% level. And this is 100% level of the quadrant. So at 10:05, we are at the midpoint of this quadrant. Sorry, lower half of this quadrant, 25%. So market is going towards the midpoint. So let me play this. So what happened here is on the 5-minute chart, you can clearly see price went into this midpoint of this day premium wick midpoint quadrant level, 50% of this premium wick, and then we had a huge rejection. So again we had this huge wick, right? Now plot the quadrants on this wick again, on this premium wick. Okay. And at the same time, you can see this first presented fair value gaps, right? So this midpoint, daily quadrant wick midpoint is lining up with, this is the 15-second chart. And the 15-second chart, you can see this is lining up with Tuesday's first presented fair value gap on 15-second chart. At the same time, this wick is also lining up with Monday's PM session first presented fair value gap. So that doesn't matter, but the thing is main this quadrant midpoint, you can see this reaction from there, from here. These are lining up with these things. Next thing is, whenever there is any PD array, we want to see a reaction from that PD array. That is, we want to see that market is changing its direction from that PD array. So currently the market was going up, right? So when this market has encountered this premium wick midpoint, so what we anticipate is, we anticipate some kind of reversal or change in direction. So the market was currently going up, right? So we want to see a reversal from here. It could not be a permanent reversal, a small intermediate reversal, because you can see we have this huge fair value gap. We have one more fair value gap here. At the same time, you can see this candle is not having any wick. This candle is not having any wick. So I'll just place my cursor on this wick and you can see the opening price, sorry, the opening price and low of the candle are same, 25,174, 25,174.25. So the opening and low of the candle are same. So whenever any candle does not have any wick, it will act as liquidity. So this bottom of this candle will act as liquidity, but at the same time you have this fair value gap. So first thing is, market went up. We reached into a premium level, which is 50% of this daily premium wick. Then we had a rejection. But how to confirm that there is a shift in market structure? So now we'll go on the lower time frame. So whenever we can see this candle is, this up close candle is closed by this candle. So what do you have here? A bearish order block. This is the up close candle and this entire candles have engulfed this up close candle after reaction from a premium array. So this candle will become a bearish order block. So on a lower time frame, you can see this is 1 minute time frame. On the lower time frame, you can observe the same thing. This entire series of up close candles is engulfed by these down close candles. So we have a bearish fair value gap. At the same time, we have this wick quadrant levels plotted. So now let me play this again. My entry was once price closed below this candle, I was entering on this candle and I placed my stop loss initially above 50% of this first presented fair value gap. But again, when price was coming back up, I placed my stop loss above this 50% level, above this 50% level of this wick quadrant levels. So I placed my stop loss on top of this candle. So let me show you. You can see when price came back up, my stop loss was on top of this candle. Why? On top of this candle, just observe, this is a 1 minute chart. On this candle top was my stop loss. So this is the 1 minute chart. On top of this, what is there? This is the midpoint of the this wick quadrant levels midpoint. So whenever we are bearish, we anticipate is price should not come up to 50% level. Should stay below 50%. The VIX can come beyond, VIX can go beyond 50% level, but the market, when the market is really bearish, we anticipate price to remain below in the lower half quadrants. That is this quadrant and this quadrant. Price should not go above 50% of this wick. So let me replay this again. You can see price came down, again went back up. See the reaction, guys. See the reaction to the midpoint of this premium wick. Okay, so price went back up, just hit the midpoint of this premium wick. So my stop loss was just on top of this candle at the high of this wick. So initially I kept my stop loss around 50% of this fair value gap, but when price was again coming back up, then I went and placed my stop loss on top of this wick. So the first thing is we need to plot our arrays, that is this premium wick. I plotted the quadrant levels. The market was coming up, so this is the premium array. So we expect some kind of intermediate reversal or a small retracement. So for that, we wait for the price to go and hit this midpoint level, and then we want to see some kind of reversal. So for that to happen, we wait for either shift in market structure, that is any low to be taken out, or we can see any kind of inversion fair value gap form. If you see, there is an inversion fair value gap also here formed. See, this bullish fair value gap was engulfed. So again, price went back into this balanced price range. You can see on a 1 minute chart, price not close above this balanced price range. We had a volume imbalance here, so price came back into this volume imbalance. At the same time, we have this premium array quadrants plotted. So the price went back into 50% of this premium wick and then rejected. So once we have this rejection, so the next thing is again the same thing, guys. So this is series of up close candles. Again, after rejection, we want to see a closure below this up close candles, so that this up close candle will become a bearish order block. So this is on a 15-second chart, but on a 1 minute chart, you can see if I plot my quadrant levels again. So we have a bearish fair value gap on a 15-second chart. Price went back up, hit this midpoint level, started reversing, and you can see this fair value gap, guys. Bodies of the candle stayed inside this fair value gap on a 15-second chart. So again, at the same time, immediate rejection from this midpoint level. So we have this up close candles, again engulfing these up close candles. So this will become a bearish order block. So again, price is coming back into this breaker or bearish order block. At the same time, we have this wick. We have this premium wick. Again, plot the quadrant levels on this premium wick. So like I said, when we are bearish, what we want to see is the bodies of the candle should never go beyond 50% of the PD array. So in our case, you can see price went back up, hit this midpoint level, again this premium discount wick midpoint level, premium wick midpoint level, and then we are reversing. So let me play back this again. See, you can see this again, the next candle went back up, hit to the pip to this midpoint of this wick, and then started rejecting. Now again, when price is coming back up, we have this huge wick here, huge wick, right? So again, you plot the quadrant levels on this wick. So when again price is bearish, what we want to see is, so when price is bearish, we are expecting price to come into this fair value gap. So, but we have a huge wick here, discount wick, discount wick. So when price is coming back up, you can see this candle again hit this midpoint of this wick, again it went back up. Again this candle hit the midpoint of this wick, again it went back up. So what we want to see is, on a lower time frame, we want to see a closure below this midpoint, this wick midpoint. So when price is going down, this discount wick should become a premium wick, because when we close below this discount wick, it will become a premium. So now I will show you on a lower time frame. This is 1 minute chart. Now this is a 15-second chart. So on a 15-second chart, you can see price was wicking around here, but finally it gave up and it closed below this midpoint of this wick with the body. So on the next candle, immediately you could have gone short, or you could have pyramided your position. So this was one wick. So when we had this rejection from here, from this wick midpoint, price came down, again created a bearish order block. Again we have a premium wick here. So price came back into this premium wick. So when price is bearish, we anticipate the bodies of the candle to remain below 50% of this wick. So you can see this candle and this candle, the bodies of the candles did not even go up to 25% of the lower 25% of this wick. Okay, so that is clear. Again, next, so before plotting this wick, I want to show you one more thing. So again we have this wick, right? So again, when we are bearish, what we want to see is this discount wick should give away. So price again should close below 50% of this wick. Okay, so you can see this candle closes below 50% of this wick with the body. We always want to see a closure below 50% of the wicks with the body. So once we had this, now I'm going into the lower time frames. At the same time, you can see this next candle, it went up, hit this low of this candle, which is nothing but a bearish order block now, and it closed below 50% of this wick. This is the kind of signature we want to see. This is the confirmation market gives us that it is coming down. The same thing can be observed even on the lower time frame. See, this candle closed with the wicks went up, but the bodies always closed below 50% of this wick. So this is the confirmation, guys. So this could have been your one more entry. This could have been your another entry. So um, so there is one more discount wick, guys. We want to see price move away from this discount wick, close below 50% of this wick. You can see we had a huge expansion. See the precision here, guys. This candle just touching the top of this wick, top of the wick, and just expanded away, giving up the ghost. It came down. So now you can observe what are the discount PDRS we are having. So before reaching here, what are the discount PDRS? We have this new day opening gap. We have this new day opening gap, and we have the low of this wick. We have the low of this wick here. This gray color line, which is the low of these quadrants. This is the line, guys. Now let me overlap that with the new day opening gap. See the new day opening gap with the lower quadrant of the wick. So this will be our first objective. So we want the price to reach first here, then it might reach here, but first objective would be this. Let me play this again. Okay. So you can see the reaction here, huge reaction. From this 1 minute fair value gap, inside this fair value gap, we were having this new day opening gap and low of this daily premium wick. So whenever we are having any this kind of PDRS, what we want to see, a shift in market structure and immediate move away from the PDRA. So let me mark my quadrant levels on this. You can see this wick never closed below 50% of this wick. So it closed, the body closed above 50% of this wick, so which is a very good signature. So now on the lower time frames, you can see we have a shift in market structure here. This swing high is engulfed by this candle and price is coming back into this volume balance. So price came back into this volume balance, and again price came back into this bearish fair value gap. Again you can see price again, we had this candle close above this bearish candle, so we have bullish order block. Again price is coming back into this. See, what do we have here? What is this? This is on a 15-second chart, this is a first presented fair value gap at 9:31 Monday. We had this fair value gap, so I extended that fair value gap till Thursday. So that is the reason I tell you guys, we have to always plot all these fair value gaps from the past 5 days. So when market again closed above this fair value gap, it came back and it started accumulating more orders here, and again it started going up. So when market is again going back up, so we took the sell side liquidity. Now we took this sell side liquidity. So where is the premium liquidity? Again at the buy side, this swing high. So we can target this swing high. Now I'll remove all these things. These are too much. It will be a confusion again. So now when market again came back up, you can see price on the 5-minute chart, again it closed below this premium wick midpoint. Now let me plot on the 1-minute chart. This is the premium wick, guys, on the 1-minute chart. So let me plot the quadrant levels on this premium wick. See, price came back up, took this buy side liquidity, and see the reaction from the low of this wick, guys. So that is the reason I say you have to plot all the quadrants on the wicks. So price came back up into this premium wick. It touched the low of this wick. But what I always say is whenever we reach any premium array or a discount array, we want to see a reaction, that is market is moving away from it. For example, when we came into this discount PD array, coupled with this low of this quadrant and this new day opening gap, see the kind of reaction. At the same time, again when market went up into this premium wick, we expect the same kind of reaction. So market never went even to the 50% of this wick. We had an immediate rejection. Now we can see these two up close candles. These two up close candles are engulfed by these candles. So again we have a bearish order block. A lower time frame. So let me show you this on a lower time frame. These are the series of up close candles. We had a reaction from this and we rejected from this level. Again we closed below this first presented fair value gap PM session. So we have a bearish order block. This series of up close candles. This series of up close candles. So now we have a bearish order block. So you could take your next entry here. So you could have taken your next entry here, and then what will be the next target? This swing low and this imbalance, this bullish fair value gap. So let me play this. So finally, price came back into this 15-minute fair value gap. So now we shall review this part of this price action. So like I said, when market closed below these up close candles, we have bearish order block. So immediately you could have gone and short the market, and in this volume balance, you could have short the market inside this volume balance. Let me remove this. So we have volume balance here. You could have short your entry here, and you could have pyramided your more positions inside this bearish fair value gap. And again, when market closed below this premium discount array, it will become a premium array. So when price again comes back into this premium array, see the reaction, guys. See the precision here. Okay. And similarly, we have this volume balance. You extend it to the right side. Now let me show this, the same thing on the lower time frame. So this was the reaction on 15-second chart. Similarly, when again this candle closed below this volume balance, see the consequent candle. It just came back into this, closed below this. See the reaction from here. Then we drop down. Again, you can see this new day opening gap supporting here. Bodies never went above this. So to summarize, what is the secret to scalping is nothing but this. This is the pre-routine you have to do. And when the price reaches premium, you anticipate a reversal or not a small reversal. When price reaches a discount, you anticipate reversals from the premium PD arrays and discount PD arrays. So in our case, we plotted this daily chart premium wick 4 quadrants, and this is a 5-minute chart. So this is a 1-minute chart and 5-minute chart. So price when came back and respected this midpoint of this premium array, we want to see expansion away from this. So we can clearly see price again engulf this bullish or bullish candle. So we had a bearish order block, and we can target our again discount levels. So this is very simple, guys. If you start plotting all these daily on your charts, you will see all these kind of things. You will see the magic happen in front of your eyes. Only thing is you need to do your pre-market routine and you have to plot all these levels. See the reaction here. And again see the reaction from this premium wick. Stop it. So again, when price is rejecting from here, we want to see price move away from this wick midpoint. So you can see this candle closed below this midpoint of this wick, and the consequent candle stayed below the midpoint of the wick with the body. That is important, guys. We always want to see bodies close below midpoint of the wicks, but this wicks of the candles can shoot up, but the bodies should always remain below the midpoint. So that is the signature. When the bodies are going above means it is something wrong. So the price might be reversing. So that is why you should always plot all this premium level and discount level. So it will take time, guys. It will take time, but you have to spend a lot of time doing all this kind of analysis. Then only you will able to see with your own eyes like how the market is reacting at this VIX, how the quadrant levels are playing up. So these kind of things only when you go into your charts, you plot all these levels, you will be able to see. So that was the trade I took, guys. That was the logic behind the trade, why I took that trade. So that's it, guys. If you have any doubts regarding this, you can just post in the comments. I'll reply to them. Uh, so my main trading logic is simple, guys. Very simple. I just plot all these levels on my charts, and I just wait for the price to give any kind of reaction from them. That's it. And I target the nearest liquidity. Say for example, the trade which I shown, I entered here somewhere and I target the nearest liquidity, this swing low. I did not even target this swing low. I did not even target this fair value. I was targeting only some 10 to 20 handles. That's it. But if you are able to consistently do this, you will find multiple setups in a single day. So that is the reason, guys, my psychology and my mental capability to hold a trade is very less. So that is the reason I came into scalping. I can't hold a trade beyond maybe 1 hour or half an hour or 15 minutes. But if you see, most of my trades are completed within 15 minutes, maximum 15 minutes, and some of the trades are completed even within 30 seconds or 10 seconds. Say for example, this trade, guys, this trade which I took here, it took how many candles to complete the trade? 1 2 3 4 5 6 7. So this trade was completed in 7 minutes. So that is the reason, guys, I do only scalping. I don't have the patience and mental capital to hold my trades. Maybe in the long term I will be able to do it, but currently I'm still trying to trying to master this scalping. So there is so much your attention has to be beyond 100%, guys, when you are doing scalping, because you are monitoring so many things simultaneously. Say for example, this daily candle, this 5-minute candle, this 1-minute candle, this 15-second candle, candlestick chart, I mean. So you're monitoring all things simultaneously, and you're what do you say, you have very less time to enter into a trade when you are doing this kind of scalping. So you have to be at your best So that's it, guys. That's it for today. If you have any queries, you can just shoot in the comments. I'll reply to them. Or if you have any more queries, if more people are having queries or any doubts, I'll do another video answering all those queries. So that's it for today, guys. Hope you learned something. This is my secret to scalping. Thanks.